All right, for today we'll continue our discussion on Chapter 10, which is our standard costing on materials and labor. A couple dates to keep in mind. Again, Wednesday is our due date on all of our assignments, the 17th. And then we'll do our exam 1 week from today. And I'd like you to come to class for that exam, please. The project problem, I'm going to talk about that, problem 71 today. That is also a TSA problem. The 25-pointer for this chapter is a TSA. So we got to make sure we hit that 77% requirement for that problem. So there's just a couple things I want to address to make sure we're comfortable with the question or the problem. Where we left off last week, I wanted to jump into our discussion for today. This is on page 529 of our book. We've gotten a chance last week to compute some variances, some differences between our standard and actual. But the discussion then revolves around when do we investigate these variances, and that begins on 529. So what they talk about is a range of variances, and there is an upper limit and a lower limit, and depending on where our variance amount is, we will investigate. If our variance lands in between the upper and lower, we don't investigate that variance. Okay, make sure I spell it right. Because there is a cost to investigating a variance. There's time, there's labor, there's maybe even some material involved in doing that decision. Certainly overhead will be involved in that decision or that research, so to speak. So there is a template on page 531. I gotta go one more slide here. That looks like this. So on this screen right now is on page 531, Exhibit 2. You can see here that there's an upper limit and a lower limit of 90. And at some point, there was only one variance that exceeded the upper limit, and that's when we would investigate that variance. So in other words, the variance has to be large enough to warrant the investigation. These other ones were within the standard of acceptable range. These we don't investigate. Now the key with this understanding is what sets the middle. Well, the acceptable range is the standard number. So based upon our standard, that gives us our middle ground. And then we decide, in this case, 10% above the standard or 10% below the standard is our upper and lower limits. So the book will give us, basically we have to figure out this, the standard, and then the book will just say, well, this is the range, 10%, 8%, whatever the range is, and then compute the upper and lower limits from that point. So the problem I want to do that has this computation in it is, I think they're taking the walls down here. They're doing the what? Oh, they're taking the tables down. Oh, I'm going to have to close that.
Yeah.
Problem 68, if we can take a look at problem 68, there isn't a lot of problems with the upper lower limit in it, so hopefully we should only need one here that kind of overviews this concept. They actually have it April, May, June. We're only going to do the month of April. So we have to look at both materials and labor. So we'll use one of our templates if you wish to. The management of Golden has determined that the cost to investigate a variance ranges from between $2,000 to $3,000. So that's, again, time, material, effort to investigate a problem. And sometimes the variance is not large enough to investigate. So their range is 8%. So on this particular problem, they're saying 8. The example in the book was 10%. So each company has its own range. And they give us a standard cost card information. Materials, 8 pounds, 25 cents a pound. Labor is at 0.4 hours and $7.50 per hour. Actual production for the past 3 months shows the following. So below that chart then is actual production units, 90. So I'm going to put that on here. And that's units, 90,000 units for the month of April. And their cost was 189,000. Where on my template does the 189 go? It's a dollar amount, right? Actual is always on the left side, right? Correct? Everybody in agreement? Where does the 723 go? Which is pounds. Polly? Yeah, in the middle here. Excellent. Going to the labor. Where does the labor cost go? Actual. All is on the left, correct? $270. And then 36 is going where?
Actual hours.
Actual hours, yeah. Perfect. And obviously we can take our calculator and come up with the actual hourly rate. Since we're down here, we might as well do that. And what do we get? Or how do we get the actual hourly rate? How do we get this number?
7.5.
What is it?
7.5.
7.5, right? We just take our cost, divide it by the actual hours to get our 7.5. So this is actually computed. What was our standard hourly rate from the card, standard cost card? The 750. Very good, Teresa. Yes. Why didn't we use the 3? That's per unit, right. So these are always per hour. So I can put that in. And then obviously this is the same cost, 270 in the middle. So we have a 0 rate variance. Does the author give us NA here? Not applicable, or it might even be favorable? Anything that's above 0 or below 0 would be favorable. Might be NA, because there's no variance there. Okay, how do I get my purple number here? What's it based upon? Yeah, the actual units, which was 90 in April. I've got to convert the units to hours. So what do I multiply by? Units times what? 0.4 hours, yeah, very good. So the 0.4, again, I'm trying to prep you for the verbal definition. The 0.4 is the standard hours allowed per unit. This 0.4 is the standard hours allowed to make 1 unit. So this obviously is 36,000 hours. Now this definition, the author wants us to use, these are the allowed hours to produce actual level of output. These are the allowed hours to produce the actual level of output. What we should have used, right, in total hours to make these 90,000 units. So I'm going to put 36,000 in here. What's 7.5? Well, it's the same number. So we have, again, a 0 efficiency variance, total 0 also. But it gets us used to our terminology here a little bit. So would we investigate anything here? Obviously, no. There is no variance, right? Now, remember when we had our chart before, there's a middle. For labor, what is the middle line here? Looking at these numbers, it's the red number, the 270. Remember, the standard sets the middle. The standard sets the middle. We would go +8 for the upper. We would go -8 for the lower. I think there's one question or 2 questions on the exam where you have to determine what is the upper limit, what is the lower. Your job is to remember, how do you set the standard? The standard is set by using the standard rate times the standard hours. That sets the middle. That's what you need to know. That way it's really easy to take an additional 8%, which is, oops, sorry.
21,600.
How much?
8% is 21,600.
So the upper limit then becomes 291,600. And then I'm gonna subtract 21,600. My lower limit is 270 minus 21,600.
248,4.
There you go. This is what the test is going to be asking for. What are the upper and lower limits? It's very easy to put this in a multiple choice question. So we'll do it for the material as well, but that's basically what we're looking at. For those at home, any questions? No? Okay, thanks, Jade. All right, going back to our problem then. Let's go to the material. We're going to do the same thing. We're assuming here on these variants or these investigations that there is no beginning or ending inventory. At least they don't talk about a beginning and ending. So we're going to say the purchase and the use are the same quantity levels. Going into this, again, we can compute the actual rate, taking cost divided by pounds. And I'm going to go to at least 3 digits here, 0.261. And what is my standard price, though, the green box? 25 cents. So we can put that in 3 times. Looking at the price I paid in the standard price, looking at these 2 blue and green boxes, do I have a favorable variance price or a unfavorable price? Right? So we can add that already. Anybody computing this?
187.50 is the, yeah, that one. Or no, 180,000.
Oh.
750. So the difference for the first one is 8,250.
Perfect. And Austin? Yep. That's my SQ. This number over here. What do I multiply the 90,000 by? What's the allowed quantity per unit? How many pounds from the book?
8.
Thanks. Yes, it is 8. Thank you. Do you see where the 8 is?
Yes.
Okay, thanks. And that gives us our standard quantity, 720,000. Austin, maybe you can help me with this. I used 723, right? I was supposed to use 720, so what's my usage variance? Favorable or unfavorable? I used this. I should have used this.
So unfavorable.
Yeah, because I used more, right? Excellent. Awesome. Half a would be 360, so 180 would be a quarter. 750, unfavorable variance. Since I got two unfavorables, I can do what? Combine them, so my total 9,000. Obviously unfavorable. So, my middle number to compute my variance investigations, I'm actually going to have two. If I'm looking at this price variance as to whether to investigate, the standard is going to be the 187.50. If I'm looking at my usage variance, the standard is going to be the 180. So materials actually has two middle numbers basically, one for the price, one for the usage. Labor only has one because it's one template. Remember, I have a break here in the middle of my material because of inventory. In some cases, I will have more purchases than I will have use, right? So here I'm going to have two upper and lower limits. So I'm going to do the price one right here. I'm going to just try to squeeze it in here. My middle number is going to be the 187.50. I'm going to go plus 8%. That's the standard the company has said. I'm going to go subtract 8% to get my upper and lower limits. So 8% of the 187.50 is what, Diane, do you have that? 8% of 187.50?
Oh, I just used 108.
Oh,
14,460.
yeah, 14,460. So I'm going to put that in red here. I'm going to plus 14,460. I'm going to minus 14,460. And that'll give me my then upper limit and lower limit. Upper limit is 195. 210. I'm going to put them in blue. And my lower limit, 466, 290. 290? Yes. So that's what C now is looking for, is this upper and lower limit.
Are we going to have to calculate the 14,460 or use that for an answer on the test, or can you use
It
the
may
108?
ask you what is the range, or what plus 14 minus 14 would be a range.
Okay.
But I think it just asks for the 195 and the 166. What is the new, what is the upper limit? What's the lower limit? I just put the 14,460 there so I know how to get to the upper and lower. Is that all right? Okay. What number did I have? I had 189, right? Does 189 fit in that range? So this variance, we won't investigate. We won't investigate. And maybe, Diane, this is what you're alluding to. This number 14 is less than the 82 variance. So at that point already, I know I'm not going to investigate, right? Because it's well within that 14,000. Seems like a long, drawn-out process to get to whether we investigate or not. But basically, we can look at that range and say, hey, it's well within. So it's probably sitting dot-wise kind of right in there, well within the range. Now, on the usage variance, we said this is our center mark, right? What's 8% of 180,000?
14,440. Or 14,400, sorry.
So again, that's, the 750 is so small compared to the 14,400, we won't investigate this either. This variance. So both are within the acceptable range of variance amounts. That's how it works. So your job is to set the standard. What is the standard? That's the middle. Then find the upper and lower. And then decide where does that amount, where does the actual amount land, right? It's somewhere in that range, so you don't investigate. Wow. Any thoughts? It's a little messy, but hopefully that makes a sense of those couple pages in the middle of chapter 10 there. Okay, now I'm gonna try another problem for you guys. I want you to see if you can do it on your own. So let's do that. And then we're going to make the journal entries as well. I'm going to hit that kind of heavy today. Exercise 52, guys. We're making t-shirts. This is on page 572. We are doing both the materials and the labor, so this will give us a good opportunity. And I'm going to print off some journal pages for you while you're doing this, so you have a debit credit entry screen. So basically I'll print these off. Jade and Catherine, I think you can just get some plain paper and just make your debit and credit entries that way. But go ahead, I'm going to stop the recording and work on your own for a bit. I'm going to resume here. So these are the numbers that the author gave us, both standard numbers and actual cost numbers. Any question on any of the numbers that are shown at the present? Both actual and standard. And basically the standards here is to determine if our changeover, what does changeover in production mean? Basically means that we're going from one style of t-shirt to another. There's a setup of equipment, a changeover requirement here. So that's what we're trying to determine if we've done this appropriately within the standard set. Did we use the correct amount of material? Did our labor cost to do that changeover, was it adequate in this particular case? So Samantha, what was my actual price paid for per, I think it's pound, right? Mm-hmm. What was my actual price per pound?
2.4 or 95 cents.
The actual price was 95?
Oh, no, it's 79 cents.
99?
79.
79. Sorry, I can't hear very well on Monday. Thank you.
Yeah.
So looking at the difference in price, how did we do? Is it favorable or unfavorable? Favorable, right? Excellent. By chance, Sam, do you have the amount?
12,525.
So this must be 75,525? We use the same number here. No quantity differences in ending or beginning inventories. Cool, excellent. To Polly, can you help me with the SQ number for materials?
72,000.
So looking at our two boxes here, what's my usage variance? Favorable or unfavorable?
Unfavorable.
Unfavorable, right? I used quite a bit more than what I should have. And what amounts do we have here?
68,400.
A usage variance of,
7,125.
and a total variance,
5,400.
which direction?
Unfavorable.
Unfavorable? Yeah. Okay, that's it for material. How'd we do?
Why is that
Favorable. Favorable.
What would be a favorable?
Oh, I read it wrong. Yeah, it would be favorable, right? The favorable is larger. Did I just not hear you correctly? No? That look better? Okay, excellent. For those at home, what do you think? Are you guys, Jade, Catherine, are you okay? Thanks, Jade. Catherine, she's still there? Okay, thanks, Catherine. Liz, what's my actual rate for labor? Did you compute that? Or you didn't compute that one? Oh, I'm sorry. Of course, I picked the one that you didn't do.
166,130.
Is that over here?
Yeah. 130.
What's the actual rate per hour?
13 cents. 0.14.
No. We have to take hours cost over hours.
Oh,
I think you might have it backwards.
probably.
Yeah.
3.
Should be around $7. No? What?
7.28.
7.28? There you go. So it looks like, what is my rate variance, favorable or unfavorable? Favorable, right? I think so, right?
Oh,
Yeah, because I'm actually lower than my standard, right? So it should be favorable.
The difference is 27.45.
27.45. Perfect. Teresa, how about my SH?
My SH, I got 22,500.
And what did you multiply here?
0.75 hours.
So our changeover should take 0.7, the standard is 0.75, gives us our allowed hours of 22.5. And looking at actual hours, what's our efficiency?
370. Or you mean the total? The total is 166,500.
And which direction? Favorable. We got two favorables. We can add them together, 3,115. There we go. And obviously favorable. So on the test, if I asked for what are the allowed hours for the actual production, how many hours would that be? The allowed hours.
The 22,500.
Yes. The 22.5 is the allowed hours. Sometimes this is called the standard hours allowed. Standard hours allowed for the actual production. What is my standard hourly rate? It was given to us, but what is that amount? The standard hourly rate,
740.
the 740, and the actual hourly rate is
720.
728. Okay, just some things that, again, students fill this out perfectly, and then I ask this question, the standard hours allowed, and I get $166,500. Right, that's a dollar amount. All right, so let's make our journal entries. We'll do that, and then we'll take our first break.
I just have a quick question.
Oh, good.
So let's say if we were going a step further and figuring out like the whether to investigate.
Oh, yes.
So for the labor, then we would use the 166.5,
Correct, because that's the standard.
and then for the top two, it would be the 75,525 and the 68.4.
Correct. We would use as the standard, the middle number for the price variance, the 75,525, and for the usage variance, we would use the 68.4. I don't know why I put my arrow there, but that's where,
And then
68.4.
plus or minus whatever.
Plus or minus the
percentage
8% or 10% or whatever we do give you. Who is responsible for the price variance, since we're here? Purchasing. So you'll need to know that as well. So how did purchasing do?
That's pretty good.
Pretty good, right? It's favorable, looks good. Who's responsible for the usage variance?
Production.
Production, right? So please know that. How about the labor rate variance? Who's responsible for that? Pardon?
HR?
HR and production. Because the reason that they are partially, possibly, is maybe there's some overtime that was added. Maybe there were some skilled employees that were put on unskilled work. They're involved in that assignment. So that's why production is involved. And obviously here, production is involved with the efficiency variance. So you need to know that as well. In both cases, these are favorable, so they did very well, right? So again, you can show the positives as well when they do well. There is a drawback. We talked, does favorable always mean good?
No.
No, because maybe the purchasing manager did what? Bought a huge load of it to get the lower rate, because that's what we all look at, is the rate, or price in this case. But then I have a lot more cost in storage. So, or I got the lower rate, but I have not very good material. So, again, favorable doesn't always mean good, right? Just the amount. So I did give us our journal page to everyone. Let's practice our journal entries quick. We'll start with the purchase entry. We're gonna debit materials, skip a line, credit accounts payable, right? That's the purchase amount. The difference, or the one center line, is for the variance. The price variance was favorable, so what are we gonna be entering, a debit or credit? If the price variance is favorable, is it a debit or credit entry? Anybody remember? Let's put our amounts in. What did we pay our vendors? 63? 75, 500,
525.
525? That's what we paid our vendors?
We paid 63,000, I thought, for materials.
Oh, what's the 75.5? Is that what we used?
The standard, the actual.
Oh, yeah, it's the 63, that's what we actually paid. Yep. The 75.525 is the standard. So that number comes up here. That's what goes into our inventory. Remember, this is our inventory, all at standard. So it looks like I need a credit. So our material price variance, which is favorable, favorable variances are always covered when we record them, right? So this is the recording of the purchase. Now we get to our next entry. Used in production. Sometimes the word is requisition. Requisition into production. So again, just watch for terminology. I pull it out because we use the same amount that we purchased. Material inventory is credited for the same number, 75,525. But where am I putting my material? What account? WIP. Yeah. WIP inventory. Now this inventory that we're putting in is direct material, right? That quantity that we can identify and see. The metal on a lawnmower, the wheels for a lawnmower. These are direct materials. And this number is which number on our template?
$68,400.
68,400. And that's our farthest to the right. That's our standard rate times standard quantity allowed. Right? Please, for the test on the multiple choice questions, be sure you understand the lettering. Right? What is SR? What is SQ? And then our middle number, I must need a debit, right? Material usage variance. Material usage variance, it's unfavorable. Unfavorable variances are what? Debit entries. And the amount was Yeah, 7125, yep. So on the test, if you wanted to compute the material usage variance, you would take the SQ minus actual quantity used, parentheses, times SR. If you were doing it like algebraically, right? The standard quantity allowed minus the actual quantity used times SR, which is the standard rate. That will also give you the variance amount of 7125. So be comfortable doing it in a journal entry. Be comfortable with doing it using letters, basically, like algebraic letters. Does this make sense? Yay? Nay? If I looked at my template, I'm taking the difference used SQ, right, times the standard price or rate. That's how I get my usage variance. So just use the template, the letters are there to get that formula. Same thing with the price. It's the difference between what? SP minus AP times what? AQ purchase. That'll give you the material price. So SP minus AP times actual quantity purchased. That also gives you the price variance. SP minus AR times AQ purchase. That's A's answer. B's answer will be SP minus AR times actual quantity used. See how tricky we can get? Just by changing one word from purchase to used, that formula is wrong for the price. Did everybody hear that? So SP minus AR times actual quantity used. That is not the price variance. Price variance is always based on what? Purchases, not used. So watch for that too. Final entry is our labor entry. Yay. So here are our numbers. What do we actually pay our employees? So I asked that question. What did I actually pay my employees?
The 163,385.
163,385 is what I actually paid my employees. What goes into WIP? What number goes into WIP? 166,500. Very good, Teresa. Yes. Okay, so let's make our entry. So I'm going to debit WIP for 166,500. That'll be my first entry. Again, this is just the direct labor. Those people actually working on producing the product, that's going to be debited. Skip 2 lines and use wages payable as our credit. That was 163,630.
163,385.
163,385. And both my rate and efficiency variances were favorable, right? So there'll be both credits. Labor rate variance, credited. Labor efficiency variance, 2745 and 370. If you want.
Shouldn't it be a credit?
Oh, thanks, Tom. Formula-wise, we're comparing the rates. Standard rate, actual rate, times the actual hours for the labor rate variance. We're comparing the standard quantity allowed to the actual hours times the SR, standard rate for the labor efficiency variance, if we're doing it in a formula. So know those letter designations. If you turn to page 553, please. This is a nice summary page. Keep it handy for the exam. It also shows these formulas, SP times AQ, AP minus SP times AQ. It shows us those formulas. Keep that in mind when you're doing the multiple choice questions, because they try to trick you with what letters they have in that formula. Okay, so let's take our break. I want to do the closing entries when we get back, and then review our 25-point problem. For our closing entries then, the author, the textbook author, wants us to close the unfavorable variances first, and we'll do them together, both material and labor together, and then second close the favorable. So this is where, again, you need to be careful. I think we only have one unfavorable variance, right? And that was the usage variance. So there's only one. There's only one. And we're assuming that these variances that we're closing are immaterial, which is the same as saying the variance is small in cost. So we have a normal balance for an unfavorable is debit, so we gotta credit the material usage variance. And we gotta debit cost of goods sold. So that's my closing entry. Here again, a lot of mistakes happen because students reversed the entry, right? So they debit instead of crediting in this case. So unfavorable variances are credited to zero them out, make them zero. So remember, our goal here is to get rid of the variance quantities. They're temporary accounts. So we don't want to see a variance on our income statement. They go into cost of goods sold. Our favorable variances obviously would be next, all in one entry. So here the variances favorable, they're normal credit balances. We got to get rid of them as a debit entry. Material price variance, the labor rate variance, the labor efficiency variance. again, we're assuming that the variance quantities are small. So we're just going to close the cost of goods sold. Let's see, I'm just gonna squeeze up here a little bit. 2745, 370. And the price variance was 12,525.
$15,640.
15,640. Okay, I got an intermediate question. If I debit cost of goods sold, does it go up or down? Careful. It goes up, right? A debit to an expense makes it go up. Cost of goods sold is treated as an expense. So you may be asked, what direction does it go? It's going up. Obviously, a credit makes the cost of goods sold number go down, right? So, again, we do this at the end of the month to show what actual numbers on the income statement. You can't have standard numbers going in. I was going to find. I think I know where it is. Can I have you look at page 554? I was just trying to find the discussion on it. 554. It's the last paragraph, actually. I'd like to have you notice for the test, page 554, it starts with if the variances are material. In other words, if the variances are large. If they're large, we're going to prorate the variance. Prorate the variance across what accounts? That's the question. What are we prorating those variances across what accounts? And
Work in process.
WIP and
Finished goods.
and so instead of one debit or credit, I'm going to have 4, right? So this is only though for the material price variance. So I'm going to make that distinction. The material price variance hits all 4 items. The other variances I'm going to put in red. And when I say other variances, I'm talking the labor or material usage variance. There's 3 of them. three remaining, the usage, the labor rate, and efficiency only are prorated across WIP, finished goods, cost of goods sold. The remaining three only hit those three accounts, right? The only one that hits the fourth account is the price variance when we record the purchase entry. So make the distinction, it's a large difference, we would prorate. And you basically base it upon the ending balances. So if cost of goods sold have 50 and 20, 20, 10 as a percent level, right, of total, cost of goods sold would get 50% of the variance. Finished goods and WIP would get 20% of the variance. And then material inventory would get 10% of the variance based on a proration. Proration is based on total. So that's how it kind of works. Okay. Any question on that? So know that for the test. And those, again, multiple choice questions. They'll talk about a material variance. Okay. Let's look at our project problem next. If I could have you turn to page 581. Page 581. I'm going to jump to the C now. Link. If you have your templates, this will take you 10, 15 minutes to do. But I want to point, and the reason, maybe it'll take you 30 minutes, because there's journal entries, right? There's also journal entries with this problem. I'm going to make this a little bigger. Can you all see the numbers now? The main part of this problem is computing the material variances, right? And then also the labor variances, questions 1 and 2. They do have an ethical question in question 3. It says here the purchasing agent purchased a lower quality raw material from a new supplier. Would you recommend that they continue to use the cheaper raw material? You got 3 checks, you got 3 choices, so it's pretty much a guarantee. But again, we've talked about this already, that a favorable variance is not always a good thing, right? So that's what that revolves around. And then the journal entries, obviously record the material purchase, record the material usage, and then you have your labor, record the payroll is the labor entry. And then here is what I want to talk about. There's 4 lines here and then there's 2. This is the closing entry. These are the closing entry. The transfer the material usage variance and labor variance to what account in the closing entry? What am I debiting and crediting to close them out? Pardon? Cost of goods sold, yeah. That's what they're talking in the last 2 entries. C now wants the unfavorable ones closed first, the favorable ones closed second. Okay. So, and get used to that. That's pretty much the mode that they do it in. And you close all the unfavorable, whether it's material or labor, you close them all in one entry. So we've talked about that. And secondly, for this problem, there is a difference between a purchase in letter B and the usage in letter C. So again, we purchased 260,000 pounds, right, in letter B? But we use a different amount in letter C than 260,000 pounds. Because what do I have at the end of the inventory? No ending inventory, right? So I must have used a different number than I purchased. So make note of that. I think the rest is pretty much straightforward, compared, similar to what we did in class here. This is, again, be careful. This is the 77%, so this is a TSA requirement. Let me know if you have questions, please. We talked about responsibility for labor and both rate and efficiency. Couple terms before we end for today. One is called target costing. These are terms that will be on the multiple choice questions, as well as Kaizen costing. It's a Japanese term. Terminology that is used in practice. This discussion begins on page 541. Page 541. So, Kaizen costing focuses on continuous reduction of manufacturing costs of existing products and processes. So, know that definition.
That's something that you learn in
Lean
training.
Yep, it's huge. And remember, standard costing helps us with this reduction, right? It helps us focus on those, is it the price that we're having trouble with? Is it the usage that we're having trouble with? How can we reduce that maybe unfavorable variance, right? How can we reduce our cost per unit? It means Kaizen here, as the book says, continuous improvement. Again, look at the auto manufacturers, Toyota. Their big advertising in the 80s and 90s was, we're better quality than American cars. So that's where this came from, was that continuous improvement.
They have Boeing in the book too, and that's not good.
Yeah,
Since,
yes.
Toyota and Boeing
Yes.
are kind of in.
Yes, they have been struggling. Yeah, you're right. You're correct on that. So, again, there's always room for improvement, is it not? The next one is target costing. There is a small actual computation here. It's a difference. It's a simple subtraction. We're taking the sales price. Let's just assume it's an iPhone. Can you get an iPhone for $1,000?
That's all I want. Yeah, the cheap. We'll make consider it cheap.
And we're gonna subtract off the desired profit. Let's just assume iPhone or Apple said 30% is what we wanna make.
I'm sure they did find out.
That's $300, right? The difference is what? 700. Now, where is this used? Target costing is used in the development stage. There are companies now that want to start new products, right? Well, they won't do this production unless, obviously, we can get a sales price. So marketing department, they do some market studies, and they determine that the user, the consumer, will spend $1,000 for a new iPhone. That's the max. So once we know the 1,000, we subtract off our 30% desired profit, or $300 in this case. So our target cost then in development the $3 amounts, our material cost, our labor cost, our overhead applied, right? So here again is a very good reason why we use an applied rate. We can quickly determine whether we can make it for that $700. If we can't make it for $700, we don't do the project. If we can get below $700, great, we'll do the project. And that's what target costing does for us. It gives us a direction as to whether we will proceed or not. So that is also talked about on page 541 in the design section of it. Do I have a small, I think I do have a small problem on this. Let's take a look. Maybe I don't. No, I guess I don't. But just know the definition of it. Again, it's a simple subtraction to determine the amount, the target cost. The rest of the slides that I have out here are the appendix, which begins on page, I'm going to jump and skip the overhead. The appendix begins on page 552, 553. And those are just the journal entries. So that ends the chapter discussion, terminology, and so forth. So I'm just going to keep those slides out there for you. So that lends us to what are we going to do on Wednesday. Wednesday will be a review day, and which means we're going to do some more templates, just kind of get you ready for the exam. I'm going to make them a little tougher on Wednesday because I'm going to go backwards in the template. I'm not sure what problem yet. Maybe I should do one. Let me find it. Let's do one today. I always like to end on a problem. We do more so in the overhead analysis. Maybe I can't. Let's just do this one. 55. let's end with 55 here. We won't actually do the journal entries. It's on page 573. Has anybody ever delivered pizzas? Oh, this is DVDs. 56 is pizza. All right, 55 it is. Go ahead, fill out a template. See how you do here. This is just the labor rate efficiency variance, just the labor part. So we're skipping the material, just doing labor. Just to get these out of the way. I like this problem too because it gives the information in a paragraph rather than a table. So it's a different view than normal. So I'm going to stop my recording. See how we do. So what do you think, guys? Does it look all right? Just a couple points here. Again, when we're talking rate, there's probably an overtime issue here, right? It's unfavorable. Maybe we spent more on overtime, or we could have had high paid employees doing the work, which we didn't plan on, right? So, or we gave somebody a raise and we didn't plan on those raises coming into effect in our production cycle here. Efficiency looks good. Here again, this bodes well for training. And also it lends itself to machine operation. So our machines were running pretty well. We were able to hit our times on our production levels. How many did we produce? 12,800. So our production was at 12,800. So that's how we got this by multiplying by the 2 hours, right? Again, 25,600 hours. So favorable variance lends itself for a very efficient operation. So that's good. That's very good. All right, the other problem that we can finish up then for today is 54 on the material end of things. So good job on reading the words. So go ahead again. Are you all done with the material already? You guys are so good at this. Anybody want to enter these numbers? Okay, so those are our numbers. You can grab your numbers. So here we have dollar signs, 245. So how about this? Which am I doing? There you go. It would help if I had the right one. How about 317, 300? Here again, production looked like they did pretty well, right? Purchasing not so well. But remember, when we set the standards, we usually set the standards at the start of the year, so some things we just cannot plan. So something might have happened to the external price that we weren't counting on. So you can't go to the purchasing agent and start screaming and yelling at them about the unfavorable variance. It's also some of our responsibility to make sure what was the reason. Look at the tariffs that kicked in. I'm sure that affected a lot of companies' variance reports quite a bit. Depends on the industry that you're in. All right, how'd we do on this? Okay? Good? Okay. Well, let's stop here then, guys. The rest of the class is yours to work on your CNOW assignments or the 25-point problem. If you want me to review your Excel spreadsheets for the variance computations, just let me know. I certainly will do that also. All right. Good luck on those taking the intermediate test. I hope you do well.